Hey everyone, Nikola reported second quarter earnings results that I'm going to review in this video. I'm also going to update my buy recommendation for Nikola stock. On the day of this earnings release, the stock was down 25%. But if I zoom out and give you the 1 month chart, the stock is up 84%. But if I go out even longer and give you a 3 year chart, the stock is down 93%. So this stock has been extremely volatile in recent years and recent weeks especially. But I'm going to answer if this 25% dip is a buying opportunity or should investors stay away from Nikola stock? So you're not going to want to miss out on that. But let's get started with the earnings review. So in the second quarter, Nikola's revenue decreased to 15.3 million compared to last year in the same quarter where it generated revenue of 18.1 million. Its net loss on the bottom line worsened to 218 million from 173 million in the same quarter last year. These are massive losses when you compare to the total revenue. The company's spending a lot of money on research and development, in ramping up its manufacturing, in retooling its manufacturing to develop the hydrogen fuel cell from the battery electric truck. And so it's been spending a lot of money without a lot of revenue to show for it. Trucks shipped in the quarter decreased to 45 from 48 year over year, and trucks produced decreased to 33 from 50. So production and deliveries were down compared to the same quarter last year. But the good news is that sales orders are up, customer demand is up, and the company began serial production of the hydrogen fuel cell electric truck on July 31st, and customer deliveries are expected in September. Nikola's already secured over 200 orders from 18 different customers for the hydrogen truck. So it looks like demand is there. Demand is meaningful for that hydrogen fuel truck. Let's see if the company can effectively and efficiently roll out this production without delays and pauses. The company was able to raise its cash through stock sales and asset divestitures. It now has 226 million in cash on hand. Also, earlier in the day, Nikola got approval to increase the number of shares outstanding. So if Nikola needed to raise more cash, it can sell more stock to raise more cash. And that alleviated some concerns about the company running out of cash. That concern should be decreased. In another sign of good news for Nikola in the quarter, they secured over $50 million in grants for hydrogen refueling stations from the government of California. That's big news for the company because these are grants. This is free money. This is a big deal because look at that's more than if you could look at multiply this most recent quarter's revenue of 15 million by 3 and you still wouldn't get up to the 50 million in grant money that the company earned in the most recent quarter. Not to mention that in the revenue it generates, the company's losing money on those revenues, while in this grant it's just pure cash coming into the company. So that's a really big deal for Nikola, really good news for the company, and investors should look to this as the best sort of news for the company. Grant money is the best sort of news. More than new customer orders, more than revenue increases and things of that nature, because new customer orders are not necessarily going to be profitable for Nikola just yet. Right? They still need to reach a certain scale of production and delivery to be profitable. But with these grants, these are just free money, right? This is just the best thing that can happen for Nikola. So if you're a Nikola investor or a Nikola shareholder, these are the things you should be looking for: more grants. And with the governments around the US looking to increase the transition away from gas and that kind of fuel, there's a lot of money being spent to roll that out, the transition. So Nikola can do a good job securing more of this. That would be great news for Nikola shareholders. Now, to my recommendation for Nikola stock, I would not recommend investors buy this stock on the dip here. I don't think the company is yet in a position to be a good investment. I think it's very risky And sure, there's the potential for a very high return. I don't think that potential is enough to offset how risky it is, right? I just showed you in the beginning of the video the volatility of the price, down 90% over 3 years, down 25% in one day, up 80% in 1 month. Not to mention the company revenue not growing, massive losses on the bottom line. Very uncertain. It would be prudent to wait for the company to make more progress before making an investment. And it's okay if you miss out on some gains in the meanwhile. At least that's my investment philosophy. I'm okay with missing out the gains when the company is more risky and taking smaller gains later on, albeit with lower risk. I'm okay with that. That's more my investment style. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.